Today, I want to talk about one of the more interesting stories in real estate right now. And I think it deserves a lot more attention than it's getting. Most of the housing conversation today is centered around mortgage rates, affordability, and whether buyers are coming back with enough confidence to really drive the market forward. Those are important conversations. But underneath all that noise, something else is happening. Major Japanese homebuilders are making very large bets in the U.S. housing market. And I think that tells us something important. Recent reporting shows that since 2020, Japanese homebuilders have accelerated their acquisition activity in the U.S. The Wall Street Journal reported that they now control an estimated 6% of U.S. home construction. On top of that, we've seen very large transactions involving companies like Sekisui House and M.D.C Holdings and Sumitomo Forestry and Tri Pointe Homes. Now, step back and think about that for a second. These are not small speculative moves. These are not short-term trades. These are long-term strategic commitments to American housing. And that matters because it's happening at the time when a lot of people feel cautious. Mortgage rates have stayed elevated. Builder sentiment has remained soft. The NAHB index was still below the break-even level in March. And the broader housing environment has been uneven. So, why would global homebuilders move in aggressively right now? I think the first answer is simple. They believe in long-term U.S. housing demand. Japan faces very different demographic realities at home, including slower population growth and a more mature domestic housing market. The U.S., even with all of its current affordability issues, still offers population growth, household formation, and ongoing demand for single-family housing in many regions. That creates a very different long-term growth profile. The second reason is supply. If you've been in real estate for any amount of time, you already know this market has a housing supply problem. Not every metro looks the same, but nationally, we have been dealing with inventory constraints for years. Existing homeowners are often locked into lower mortgage rates, which has reduced resale supply. That makes new construction even more important. So, from the perspective of a long-term builder, the U.S. housing market may look difficult in the short run, but structurally attractive over time. If demand is still there and supply is still constrained, that's the kind of setup large strategic capital likes. The third reason is that these firms are not just buying exposure, they're buying operating platforms. That's an important distinction. When a company acquires a U.S. builder with established communities, land pipelines, management teams, and regional expertise, it's not entering from scratch. It's stepping directly into an operating business with scale. Sumitomo Forestry said its Tri Pointe combination would deepen its presence across 13 high-growth states and support expanded housing supply. Sekisui House has also been reorganizing and consolidating its U.S. operations after its M.D.C acquisition. That should tell you this is about long-term positioning, not just headlines. Now, what does this mean for agents and brokers? First, it reinforces the idea that housing is still a long-term conviction asset class. Yes, the market has friction right now. And yes, rates matter, affordability matters. But if major global builders are committing billions to the U.S. home building, they're telling you that they still believe American housing has durable long-term value. Second, it means new construction should stay on your radar. A lot of agents still treat new construction like a side conversation. I think that's a mistake. If you're trying to understand where transactions, inventory, and opportunity could come from over the next few years, you need to watch builders closely. Builder strategy is not just a construction story. It's a market share story, a pricing story, and a consumer demand story. And then third, this is a reminder that real estate professionals need to think beyond weekly headlines. One of the easiest mistakes in this business is overreacting to the current moment. When rates rise, people assume the entire thesis is broken. When demand slows, people assume growth is over. But long-term capital usually thinks differently. It asks where households will be formed, where supply will be needed, where operating platforms can scale, and where structural demand still exists. That's what makes this story so interesting. Even in a market with affordability stress, mixed builder sentiment, and uneven buyer activity, global homebuilders are still saying yes to America. That does not mean every market is strong. It does not mean every builder is thriving, and it certainly does not mean there are no risks. But it does mean that some very sophisticated players are looking past the noise and betting on the long-term fundamentals of the U.S. housing. And I think that's a real key takeaway. If you're an agent, broker, or team leader, or just someone who studies the business close, this is the kind of story you should file away because it gives you a different lens on the market, not just what feels difficult today, but what well-capitalized operators believe about tomorrow. That's where the opportunity often starts.